Also have Amnish Aggarwal, Head of Research at Prabhudas Lilladher, who's joining in now to give us some cues for the day and what he's watching out for. Amnish, hi, good morning and good to see you in. I wanted your thoughts first on a name like Kotak Mahindra Bank because, I mean, not just Kotak Mahindra Bank, a lot of the banks have come back in a big way, especially private sector. And there are some brokerages like Macquarie who are very positive on these names. But what would your pecking order look like now in the private sector banking space?
Yeah, hi Sonia. We have been quite positive on private banks because if you look at the credit growth remains strong. The second thing is if you look at the valuations of private banks, most of these private banks are trading at, I would say, multi-year low price to book values. And if you look at the entire market context over the last, say, 6 to 12 months, almost all the sectors have got re-rated, and banking is one sector, and that to private banks, which are now trading at significant discount to their earlier valuations, which makes them a fit case for re-rating from the current levels. So I think we continue to be very positive and constructive on private banks. Here, I think, as usually, the pecking order is usually the top 4 banks and your ICICI, HDFC, Axis, and Kotak. But I think in the current context, I think Kotak, which has corrected significantly, and Kotak, I think the valuation it is trading at currently because of the, you can say, some restrictions on 811 and all. So I think these are all temporary, and I have not seen Kotak trading at these valuations in the last 5-10 years. I think Kotak seems to be slightly contra to some extent, but I think it seems to be a very good pick at the current moment.
All right, Kotak's a good pick at the current moment. Amnish, what about the fertilizer space? We were just talking about how these guys are, rallying anywhere between 30-40% in just the last 3 trading sessions. Hopes of a GST rate rationalization here coming in. Would you think that things would change fundamentally for these guys?
See, I see very little reason for any big exuberance in fertilizer stocks, because fertilizer, it's not a secular growth industry because your land mass is limited. And in some of these segments, particularly urea, we are using urea more than what it is required as per the land which is cultivated in India. The second thing. The third reason that, for example, urea prices are controlled by the government. Even if there is some rationalization of GST, it is not going to benefit the companies. The benefit may actually, you can say, go down to consumers to some extent, or to, you can say, it may be retained by the government because there is a big subsidy element in as far as urea is concerned. So I think it might be sentimentally positive, but I see no big reason that fertilizer stocks should rally the way they are.
Okay, no big reason that fertilizer stocks should rally the way they are. The other stock, I don't know if you track it or track this space, is CE Info Systems. It had a big move yesterday. It was up 20%. And, these markets, automotive navigation, mapping devices, connected vehicles, is a very fast-growing space. So Goldman Sachs had a target price of 2,800 on that stock. I don't know if you track this space or this stock, but any thoughts here?
See, we don't track this space per se, but we have looked at the company in the past. It's an interesting space, and the way your now connectivity is becoming important, the way you can say the maps are used and all that, I think the space has got a lot of potential in the long term. So don't have any idea about how the current financials are, how the valuations are.
In that space itself, there's Quick Heal as well. That stock was up about 9% in yesterday's trading session. In fact, in the last 1 year or so, it's tripled. We had the management join us saying that the shift that they've made from consumer to enterprise is something that will aid growth going forward. In fact, that will grow faster than the industry itself. Last couple of years, that's been the outperformer for them and has decent margins and, working capital sort of negotiations that they do with the enterprise players as well. Do you think this is a play right now? I mean, not showing in the numbers so far, but is there potential?
Yeah, you see, that's what I'm saying, that the segment sold a lot of potential because these are the, you can say, emerging segments where you can say a lot of investment is happening, lot of, you can say, the current devices and all, they are linked to all these things. So the growth is definitely going to be there, valuations and all. I think that is something which one needs to take a call.
Okay. The stocks, some of the stocks in focus today could be the IT names, right? Because of what Accenture has come out with. Accenture has actually narrowed its guidance. So that is a bit of a concerning factor. They've also spoken about how discretionary spending has gone down for certain projects. Do you think IT will come back in a big way, Amnish, or do you think there's some time for that?
See, IT is currently being looked at again like a directional trade because the way markets have rallied, IT is another sector like banking where the valuations today, they are not cheap, but at the same time, they are not as expensive as some of the other sectors are. And so people have started looking at IT that if your interest rates in US are cut or if there is little bit of more pressure, then ultimately the stocks can give some returns incrementally from here on. But my sense is that before you start witnessing any recovery on the ground in terms of demand, first before that, there might be a little bit of more, I would say, deterioration because the interest rate cut in US is also related to the slowdown in the economy over there. So I think over the next 3 to 6 months, I see very little probability of any change in the commentary as far as your IT companies are concerned. The stocks may, you can say, give you directional returns or may give trade in between, depending upon the hopes, purely on the interest rates and consequently the revival in US markets.
All right, then final question on the consumption space. For staples, do you think the rally has fizzled out, the one that started about 2 weeks ago? And what are your thoughts on Zomato? Because now there are reports that, they are in talks with Paytm to buy their entertainment business, a good use of 1,500 crore of their 12,000 crore plus cash on their books is what the street is expecting on Zomato and the consumer staple space. What are your thoughts?
Okay, so Mangalam, the main thing is that consumer staples, we are already witnessing some green shoots, and this is, I would say, quite broad based across segments in the consumption space. But having said that, the valuations they had not softened significantly, even if you look at say the situation which was there last month. Now, from there, as the market got a little bit of hint that the demand is reviving, volume growths are coming up, many of these stocks have actually rallied by even anywhere between 10 to 20, even some bit have gone by say 30-40%. So whatever you can say little juice was created, that has got absorbed too quickly. Now, incrementally, the growth rates are going to improve. The margins might remain healthy. But having said that, the stocks at the current moment, they don't offer anything which is very substantial on the plate. So I think the returns here on will come incrementally at a lower pace. That is one. Secondly, one will have to be very, very stock specific and stock picker in the consumption space to make money. Just thinking that some stock or some companies into the consumption space and it is going to give returns, I think that phase is definitely over as we stand today. Now, the question on Zomato, which is Zomato is having a lot of cash. If you look at the way the stock has rallied in the last year or so, year and a half, it is not only because of their food delivery business, it is what they have been able to do with the Blinkit business. Now, the main thing is that the today's valuations, they are quite rich. The visibility in the current businesses remains strong. And people are also looking at the Paytm, you can say that ticketing business, that might be little bit of, you can say, complementary from the viewpoint of channel, and it's more like a duopoly kind of market. So now it all depends upon if they acquire, what price they acquire, the way they go about. If you look at the overall online and internet space, I think that business may add value to Zomato in the long term. But then if you continuously, you can say, continue adding various businesses, then the entire structure of the, you can say, the company may change over a period of time. So it's more like a wait and watch that how, in what structure, in what form that business if they acquire, and what are the future prospects which pan out in that business.
Amnish, one sector that has seen a fair amount of profit taking, a little bit of a cool off this week, is actually the auto space. But I mean, who's to complain, because these stocks have done really well, the likes of a Bajaj Auto, Mahindra and Mahindra. Would you buy anything in auto on the dip? And of course, going forward, there's going to be a lot of chatter around the Hyundai IPO. So just help us navigate this. Autos for the rest of this year, what would your picks be?
You see, auto OEMs have done particularly well over the last 6 months. If you look at, say, the rally which stocks like, say, Maruti, M&M, or all the two-wheelers led by, say, Hero or Bajaj, I think the returns have been very strong. Now, incrementally, for example, whether you look at Hero or some of these names, a lot of them depend upon the rural demand, which seems to be reviving to some extent. Now, incrementally, I think the money will be made in autos, but it will now come at a much more calibrated pace than what we have seen recently. Having said that, if you look at the numbers of companies, I think particularly the companies which are on the PV side, there will be definitely some impact of the Hyundai IPO also, because that is going to be a large cap stock, and the investors will get one more choice as far as your PVs are concerned. So I think incrementally, I think still there might be some juice left in M&M because the commentary seems to be pretty strong. Tractors should see positive volumes this year. Their PV business is expected to grow in the, I would say, something like mid-teens in terms of volume growth. So M&M, even at the current juncture, continues to look good. As far as the two-wheeler stocks are concerned, I think post the kind of rally we have seen, there might be little bit of I would say sideways movement in them for quite some time. But if the monsoon plays out well and the rural demand revives more, then I think there could be something more. But now it will be at a much more slower pace than what we have seen earlier.